Well, morning. Well, I'm not gonna be speaking about gold going to 38,000 US dollars or per ounce in simple terms, because that's kind of the diabolical simple terms. I only believe in things until they happen. However, according to the recent data that we are seeing, the China moving, uh, stopping its citizens from buying the certificate gold in simple terms or the ETF gold in simple terms. I'm not here to discuss that, but I'm here to give you just simply a simple history to understand where we're heading to in simple terms. I'm not here to speculate about anything. I'm just here to give you the real physical data. Do you believe has like nobody takes notes like in the last century, in the 19th century, almost 50 years before, uh, Americans were not allowed to have physical gold as China is doing right now. In simple terms, between 1933 to 1974, well, it was legal for Americans to hold gold in simple terms. Under President Franklin Roosevelt, in simple terms, in 1933, it was illegal to hold gold, actually. They made it gold, and I'm going to give you the reason why, to understand where we're heading to, in simple terms. Well, it was legal to hold gold. There was a fine of 10,000 US dollars and 10 years in prison just for you holding uh, a commodity or an asset in simple terms. And I'm going to tell you the reason why, okay? And in 1934, they solidified that act. Remember, after uh, bringing out a law that was in April 1933, well, where they told all American citizens that you shouldn't be holding gold, and you should sell your gold actually at a fixed price of 20. It was around, I believe, 20.67 ounce per gold. And in 1934, a year later, okay, they solidified this act by saying, by devaluing the dollar. Well, when they devalue the dollar, well, the price for gold goes up to $35 per ounce. If you think money printing began yesterday, well, you're daydreaming, because it began almost a century back in simple terms. And this was almost before, I believe, the US became like a solid reserve currency. They wanted it to be backed by gold, but they couldn't they couldn't stand the deflation they had. Believe it or not, governments love spending, and all the people we're talking about here, they're politicians in simple terms. And I'm going to show you a funny act. And that's after 1934, when they certified the act of making gold, well, devaluing the dollar. Well, gold had to raise up to $35 per ounce. In 1968, well, they bought back the ETFs in simple terms, or the certificate gold for the US citizens to hold. However, physical gold was still illegal. You get the point? So, when physical gold was still illegal, after I believe in 1972, under President Nixon, when they took the dollar off the gold standards, they had the leverage to print money as much as they can. So they saw no any other importance of stopping U.S. citizens from holding gold. Well, in 1974, under President, I believe it was under President Gerald Ford, physical gold was back to the U.S. citizens, and they could hold gold after 41 years. Are you seeing where I'm heading to? You must try to understand that after 41 years, well, US citizens were allowed to hold gold, because the government had turned on the money printers after the Saudi deal, where they had, in actual sense, the dollar has been backed by oil in simple terms, because the deal between Saudi and, let's say, in the Middle East, they had to sell their oil in US dollars. That means they had to force the whole world to be using US dollars, and to make sure that everyone buys in dollars. And this money, if these are, let's say, a country like Saudi, they had to buy US treasuries. In good way, it was all good news for both parties. US had a reserve currency backed up by almost nothing, and it was enforced by everyone to be used. So that means they could inflate the rest of the world. They had the biggest money printer of all things. Okay. However, as of today's time, things have drastically changed. The US debt wasn't the same in 1971, okay, or 1972. And the return of gold, they were, I would say, they were trying to fight deflation one or the other. They wanted actually, there's a saying that says under Hamilton's theory, or in simple terms, or ideology, where they say that to control the world, you must have a strong economy. Where they invested in their stocks, they made stocks actually performed well in 1970s in simple terms. I believe that's when they performed the best. Actually, people who were born in such eras or who were available in their youth at that stage, you never tell them anything else apart from stocks. Maybe right now on gold. What I'm trying to say in simple terms, we are reaching an era where you must understand that when you see countries like China heading back to gold, that means there's a change of an era in simple terms. We have a movement maybe from the west to the east. Put me right. Listen, for the last 6 months, let's say 6 months, China has a behavior of reporting wrong gold, okay? They once said they reported around, in March, they reported 6 tons of gold. April, they said they reported 3 tons of gold. That's what they bought. I'm saying what they purchased. May, they say they purchased around 5 tons of gold, 6 tons of gold. But real numbers, real numbers, the real numbers here, I bring the real numbers. They believe to have purchased around 77 tons of gold in January, 96 tons of gold in February, 143 tons of gold in March, 157 tons of gold in April, 163 tons of gold, around at least 900 2 tons of gold have been purchased until maybe May or June. These are not like a real number, but we are giving you like close to real figures, because nations have, you must understand one thing. I believe the reason why they're hiding such prices because they want to buy low, and they believe they are buying low. And just a quotation, please. This video is not just to motivate you to be buying gold, to believe that I should be buying gold, holding gold right now. ABCD, brother, sit down and make research before you buy anything. Just for you to understand what's taking place, you must understand that if central banks are buying gold and these numbers are not being registered on the gold price we're having today, that means gold is being suppressed in one or the other. Gold is being underestimated in one or the other. This means one or two things. It means that we are looking at an era where fiat currencies is losing momentum. The dollarization that might seem like had been like a term or a myth that everyone speaks about. I'm not here to speculate where gold is heading or to 38K. I'm not there to speculate something, but I'm here to show you a few points that people who will be holding treasury right now are holding more gold than US treasuries. Okay, Japan itself today is likely to be raising rates more higher and higher because they need the money to run the system in simple terms. That means that you're going to see higher yields. Whenever there are higher yields, well, you're going to be attracting home investors in simple terms. The US debt that's raising every day, that doesn't seem to be having a solution as very soon on how they're going to tackle that debt in simple terms. Well, we also had what's known as the Genius Act that Trump signed one or the other, because it was I would call it like has he calls it genius? Well, it's kind of embarrassingly to say it's not really genius as everybody would think of it being genius. In the first place, he made exchanges that work on crypto, let's say Tether and Circle, well, to be backed by US treasuries. And making it funny and worse, it's good for them for at a certain moment. But let's imagine if crypto starts rising higher and higher and higher. Well, whoever's holding USDT will be forced to buy crypto, right? When they buy crypto, you may find themselves, because when those prices go high, they may find themselves to withdraw from the US treasuries. Well, that could hurt them sincerely in one or the other, well as hurting the US economy. Secondly, we should try to understand that I'm coming back to the point of the gold. I'm trying to show you something. Treasury has at this point, they don't look like safe havens as they are, because we saw companies like institutes like Moody coming out devaluing the safe havens to from a triple A to a double A. We must also try to understand that China made something that's making everybody speculate. That's maybe why I'm making this video right now. Stopping its citizens from holding certificate gold to buying real gold. That means if you buy gold, remember, we must understand one more thing. China launched in 2024 the Hong Kong exchange, the HKGX, if I believe. And that's a global exchange. Well, that means you can use the yuan or the digital yuan to buy physical gold and be delivered to you, especially if you're in Asia and maybe some parts of the Middle East. It shows one or two or three things. Well, China is moving off the is setting new rules for gold, has a maybe like I would say like an authentic gold system, one or the other, because US has a history. Well, it stopped its citizens from holding gold for over 41 years. Secondly, it stopped its a history about footnotes that for over the last 52 years, in fact, since 1974, 72, 73, that's when we last saw the last visit in Fort Knox. And everyone who's today in office, like Scott Bassett themselves, like they were treasury Scott Bessons came out and said like, yeah, gold is there, gold there. Why do you have to prove gold is there without at least take a video? Let's take a team of professionals to go look at the gold. But for the last over 51, 52 years, nobody has ever been able to look at the physical gold, because it's better to have at least 8,000 tons of gold. But nobody has ever taken a visit. Even Trump himself, who promised a visit, never went there in actual sense. I'm not there to complain about that, but that shows the holes in the system. I'm gonna give you an example of when Germany tried to reclaim its gold from the US. Well, at first it reclaimed its gold from between 2001 and 2003. It reclaimed its gold from Bank of England, okay? And within a snap, the gold was back home. In 2013 and 2017, Germany tried to collect or repatriate its gold from the New York gold reserve, let's say for those simple terms. Well, they promised 50 tons at first to be coming out. The US promised 50 tons to be coming out back to Germany or back to Frankfurt. They sent 5 tons. 5 tons. And at the end of the day, they received back their gold after 3 years, by 2017. Since 2013, they asked for the gold to 2017. It took over 3 years to collect all the tons of gold they had from the New York. That feel like the US had to do undersourcing of the gold. And that leaves a question mark. If someone has to do undersourcing of the gold from somewhere else, does he really have the gold in his vault? That's a question for you. That's not a question for me either. It's for me and you to speculate, because we have no data behind that. We have no physical data. We just only there to monger around. But it leaves so many questions in the first place. However, we should also try to understand that US bringing back the physical purchasing of gold, because I believe Trump once said he wants a weak dollar so that he can have competitive prices on international markets, ABCD. However, you cannot have a weak dollar and have it as a reserve currency, and you cannot have a weak dollar or stop being a reserve currency and expect to print money as the way you're printing it. So I feel like at certain point they kind of cooked, and you cannot have such access of trade market when you're home, because whenever you have a weak dollar, you're gonna have low wages. But all that happened I believe they have to find ways of clearing their debt. Are you seeing where we're heading to? I'm trying to give you points to understand how cooked we are and how China is heading to. You get the point? Because we are looking at the extent where you must try to understand that China is stopping its citizens from buying certificate gold or ETFs to physical gold. Well, they have a history behind. Well, in the .com era, China was among the biggest holders of US treasuries. And within the blink of their eyes, they saw their treasury being devalued, their money being devalued by another nation. That taught them a tough lesson. The .com era, the housing market in 2008. Today, they are among the countries that are controlling gold and they are purchasing it highly, like I just showed you right now. What do you expect? Do you believe on 24th gold will go to 38? I don't know. I cannot tell anything. And like I said in the beginning of the video, I'm not gonna be speculating about the 38K price of the gold because kind of diabolical. But China not fully going for having a backed currency of gold, but they're having it as a reserve, like an actual reserve for now, right now. And their move is straightforward. Me and you very soon we are likely to be forced to be buying using the Chinese yuan as a safe asset. History repeats itself. That's how the US started in the Brentwood. Everybody was like, okay, I can hold the dollar because it's backed by gold. But we pray also China does the same system because it has an advantage of playing that it's a strong economy. It's financially stable, not really like financially stable, but I mean it's empowered. It's the second country to the US in simple terms. It also has its own faults. We're not saying it's perfect, but as for now, wait, if the other boat is sinking, well, we can jump to the next job, to the next boat in simple terms. Otherwise, if you found meaning in this video, thank you for watching. See you in the next one. Like and subscribe. See you in the next one.